Hello there. Well, here we are again, back in lockdown, and everybody at Equilibrium is now working from home. There's nobody at the office at the moment. But having said that, of course, it's very much business as usual. We all got very used to working from home for now. I personally have never actually been back to the office other than the odd meeting, so we just carry on as we were. But this lockdown, this new lockdown, of course, has a negative impact on the economy here in the UK. And we are not the only ones. There are lockdowns in parts of Europe, like Germany and Italy and Ireland. We've got an increasing number of virus cases in the US as well, and some hospitals there are coming under quite a bit of pressure. So, the virus continues to have its impact. Good news, of course, we know we've got the vaccine on the way, and that hopefully will lead to a much stronger economic recovery, perhaps towards the back half of the year. Because if you look at stock markets, they are certainly not acting like we're back in lockdown. Stock markets have done really, really well towards the end of December and the beginning of January. And it does make us worry just a little bit. As I said, I do expect the economies should have a recovery perhaps towards the second half of this year, as long as the vaccine rollout proves successful, as long as no further variants that are immune to or the vaccine doesn't work for. And there's a few things like that. They're just worries in the back of my mind. And whereas before Christmas, before we knew about the new variant, for example, here in the UK, we were saying we're quite positive. We think the economy is going to improve. I still think that's the case. I just think in the short term, we have to accept that things may well get worse from an economic and, from a company profit point of view in the short term before they get better. So stock markets to us look a little bit expensive now. They're trading on quite a high multiple of those company profits, of earnings. Of course, we expect that they will recover as the vaccine gets rolled out and as the economy recovers. But just like the economy, we now think that they may well get worse before they get better. And that is not what markets are acting like. I say the economic situation has got a bit worse than we thought it was, but yet the markets have gone up quite sharply. So we feel that's time to just be a little bit more cautious. We've taken a bit of money out of the stock market and some of the linked investments like defined returns in most of our sort of core portfolios. Just bank some of those gains that we've seen recently and hold that money in lower risk assets. And if there's a correction, of course, we can put that back in. We just feel it's time to be a little bit more cautious, because we see this real disconnect between Wall Street and Main Street, as they say in the US. It just doesn't feel like the stock market is reflecting what's going on in reality. So we're not saying, by any means we're going to see another crash. It just feels like markets might have got ahead of themselves and we could see another correction. If we don't, that's great. We'll still see our portfolios do well as a result if markets keep on going. But we just think it's time to just rein in the levels of risk and bank some of the gains that we've seen recently. So I hope everybody is well. Please stay safe, look after yourselves during lockdown, and we'll see you again soon.